The Indian stock markets, Dalal Street was in the red again today and in deep. In the last week, the benchmark indices witnessed a sharp correction with the Nifty ending nearly 3% lower while the Sensex was down over 2,000 points. Among sectors, all the major sectoral indices registered profit booking at higher levels with the capital market and IT indices correcting sharply. Today, the Nifty 50 was down by 400 points and the Sensex dropped around 1,400 points. The major drop was seen in mid and small cap IT and telecom stocks. There are many reasons for the market plunge, we should tell you. The most important one is, in case you haven't already guessed it, Trump's tariff threats. The US dollar is maintaining its position near multi-week peaks against major currencies. The dollar index reached 107.35 on Friday against 6 major currencies. I want to bring in India Today's Siddharth Zarabi, managing editor with Business Today. Siddharth, this bloodbath on Dalal Street, Sensex tanking by nearly 1,400 points. What has prompted this selling spree?
Well, that's right. The bloodbath on our markets continues, and in fact, India's benchmark stock indices recorded their worst day in around 5 months, a Black Friday of sorts, and this in fact has been the longest losing streak for the Nifty 50 since 1996. So very clearly market pessimism, the lack of confidence amongst investors is now feeding into these massive cuts that we have seen. If you look at in terms of mid cap and small caps, it's very clear that those shares and stocks are in bear market territory. Now, why is this happening? And if we take a longer 5-month view, it's a mix of factors. It really started in some ways with the pullout by foreign institutional investors. And now the Trump tariff wars that he seems to be unveiling every other day are now feeding into nervousness around what will happen as far as global trade is concerned. But it's not just global factors. There are fears of further impact as far as companies are concerned, their earnings. We now have a situation where India and the European Union or the United Kingdom are in serious conversations for doing free trade pacts, and that in some ways there is also a fear could feed into pressure, further pressure on corporate earnings, because if goods are allowed in at lower import duties, there could be some impact. There's also the broader context of very high valuation. So some experts in the markets are saying that sanity is coming back to certain stocks and sectors where valuations had run completely out of sync with fundamentals. But the last bit of good news from the macro front, and we'll have to wait and watch for how the markets react to this, is that third quarter GDP numbers for India's economy suggest a revival. The latest number coming in at slightly better than expected reading, but it's very clear that as far as India is concerned, this 6.2% data that we saw for the October-December quarter seems to suggest that the economy is coming back, and rural consumption along with government spending, which had slowed due to the election and in its aftermath, is now back feeding into our growth prospects.
Siddharth, thanks very much for that very comprehensive view to this bloodbath on Dalal Street. We'll keep a very close watch. Track Business Today for live updates 24/7 on everything that's happening on our capital markets.